If you haven't looked at your broker lately, you're probably getting killed. The biggest way that brokers kill us are through their very high transaction fees, and I know that transaction fees have come down quite a bit over the years. We are not paying $100 per transaction like you used to do back in 2010 or 2000 or beyond. Most transaction fees on the high end are in the neighborhood of about $10 per transaction, but that's still a lot, and that's a lot if you're somebody that's new to the market and you are just getting your feet wet, and or if you have a very small trading account. And let's say you're somebody that's starting out and you only have $100 to begin trading with. Okay, great. You want to start to gain some experience right away, but if you're paying $10 per transaction, then that means that you're going to get hit when you both buy and when you sell. So if you didn't make at least 20% on that transaction, on that trade, then you're going to be at a loss right out of the gate. When we figure out a way to lower our transaction fees, it lowers the cost of entry. It allows more players into the game. It allows us to be a little bit more active when we're managing our accounts. So one of the first things that I look at when I'm selecting a broker is how much are their transaction fees. Even if I'm somebody that likes to trade on the intermediate to longer term, so if my typical trading period is holding anywhere from a couple of months to a year or longer, I'm still going to be concerned about those transaction fees, especially if I have a smaller account. Those transaction fees can really eat into your profits in a hurry. Another thing that transaction fees can do is if you're somebody that likes to either scale into a trade or scale out of a trade, meaning that you're not just going to do all of your buying all at once or do all of your selling all at once, you're going to do it in stages, then for each trade you're going to get dinged again and again and again and again. And that's great for your broker, but it's not great for you and it's not great for your portfolio. So I would highly encourage you to pay attention to the transaction fees from your broker. Now, some brokers will try to justify their high transaction fees, and they'll do it by saying that they offer outstanding research, they offer outstanding charting abilities, they have so many other bells and whistles, education, this and that justify the higher cost, and you don't have to go anywhere else to get that information. That all sounds fantastic, but so much of that stuff is available for far less or for free elsewhere. If we are willing to do just a little bit of work to find those things, you can find outstanding research, you can find outstanding charts, you can find so many tools and services. They're all out there. It's just a matter of doing a little bit of the legwork to find them. Some of my personal favorite tools to use include TradingView. I use TradingView as my charting service. So what TradingView does and what they cost, they only, if you subscribe to them, if you go with some of their paid features, it's only about $10 a month, right? Some of these brokers are charging $10 per trade. TradingView also has a free option, and there's a lot of other charting services that allow you to look at chart patterns for free, and yeah, it's tough to compete with that. And their charts are outstanding. I have another video where I talk about TradingView and how to get the most out of it. Definitely check that one out. Some of the research that's out there's a lot of ways to look for scan markets. You can see what stocks or groups are trending. You could use platforms like Twitter, like StockTwits, to get a really great sense of what's happening in the overall market. You can look at scanning services like finviz.com. They are a free platform that you can scan for stocks if you're willing to do some legwork. If you want to not do that research yourself, there are plenty of other services out there that will gladly offer you research and analysis and do a lot of this legwork for you. What you need to do is go out there and figure out which of these services resonate the best with you. And for some of you that are still using those big brokerage houses that actually you're calling somebody up and you're getting advice from your broker, the advice that they're giving you may not always be aligned with your interests or what it is that you're trying to do. Now, legally, they're not allowed to do what's in their best interest, right? Like they're not allowed to try to push you into a certain stock, and there's rules and regulations around how they can advise you. But you want to also have a very clear understanding of what kinds of rules and signals and risk management that you want to follow, so that way the person that's going to take action on your behalf also knows what to do. What's their mindset like? What are they considering? What are they going to do if the market rolls over? What are they going to do when the market eventually bottoms and starts to rally? Are they going to ride through all those ups and downs? Are they going to be selling in and out? These are all very important things that you'll need to discuss with your broker and make sure that both of you are on the same page. If they are a little bit more aggressive than you want to be, that's a problem. If they're not aggressive enough, that's also a problem. They should be doing that job for you. They should be asking those kinds of questions, but it's ultimately going to be up to you to figure out what your trader's mindset is really like. How much are you willing to risk? How aggressive are you willing to be? You need to think about those kinds of things. You need to do that kind of internal work to really have an understanding of what are you going to be able to stomach. And then you could go and talk to your advisor or your broker and have a much better success with whoever that person is. So if you are going to go with a discount broker, there's two that I really like and use the most. The first one is Robinhood. Now, they allow you to trade for free, so there's no transaction fees whatsoever. How they do this, it's all outlined on their website. Go check them out, robinhood.com. And yeah, they explain how they're making money. The way that I think that they make money is they're basically taking your and everybody else's money and they're earning the interest on that. And so when you have a large block, that's something that will allow them to make money. The other broker that I really like is Interactive Brokers. They charge only about $2 per trade. So in both cases, the transaction fees are extremely, extremely low. In both cases, the actual platforms, the user interfaces, they're pretty simple to use, but they're not really offering all those bells and whistles that the brokers with the higher transaction fees are charging. But that's okay. We've got other places where we could get research and analysis and charts. We don't need that from a broker. And often, those other places are offering much higher quality than what the broker is even offering too. So that's how your broker could be killing you. Let me know what you think. Let me know if you agree or if you disagree. Whatever thoughts you have, leave them down in the comment section below. I'd love to hear them. Thank you so much for watching. I really appreciate it. If you like this video, click that thumbs up button. That's going to help us out a lot. And make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.